Hello, hi. So today is Wednesday, so 26th of July 2022. We have had some mega techs earnings, Google and Microsoft. It's been a mixed bag, I would say. Microsoft actually went down quite a bit, down by pre-market about 4%. And then you have Google as well, on the other hand, actually goes up 6%. And then yesterday you got Snapchat, which is going down by about 20%. So it's been a mixed bag basically with big tech actually, some doing well, some not doing so well, like Tesla also went down. So is Netflix, the big seven. So is market getting frothy? I would say for the big seven, maybe, because they have actually been up quite a lot. But then if you look at other Nasdaq stocks, like the traditional tech, which is like IBM, Cisco and all that, they have just been up like 20% and all that. And if you look at the Russell 1000 or 2000 index, the mid cap and growth stocks, we call them the risk assets, if with the right stock picking technique, some companies are actually doing quite alright. So the question is, does the rally have staying power, with these Q2 earnings coming up? My view is there's going to be rotations to banks and industrials. Take note that transportation companies or like Grab or Uber is actually under industrials. It might broaden to these two sectors as well. Banks, insofar with the Q2 earnings of one or two banks, it shows that the deposit rates and all that are still very healthy. The non-performing loans and all that are still relatively low, and that causes the Dow Jones index to be inching up for the last 9 days. So although it didn't really go up in a straight line, but it's gone up a bit. So it shows that the market has actually broadened from Nasdaq, the mega tech 7 stocks, to other companies. So I just want to show you what the view of by this very famous guy called the Big Shot, right? Which was turned into a movie. So I just show him what he thinks about the market.
Big bets. I mean, we're talking about this was like 05, 06, 07. I mean, 15 plus years ago. And then you obviously, when he actually made the money, 2008, 2009. I mean, geez. That's fair. I mean,
do you even like this description anymore? We still describe you about the mortgage loans before the 2008 financial crisis, player,
it's all you
Big
are.
Short.
You haven't done anything since then.
Sometimes my wife says that to me, but it's getting a little old.
It's getting old? Okay, so let's bring us to the new.
that's fair. I mean, you think about this. I mean, this was 15 plus years ago now. When he was making those big bets, I mean, we're talking about this was like 05, 06, 07.
Sorry, it's here.
Appreciate everybody joining me as always. Thanks for being here, folks. Thanks for being subscribed. We are now at a new all-time high subscribers. 31 is like an individual stock picker. But yeah, it's been a long time, man, since
Happened. I think a lot of people were very conservatively positioned and they're trailing, so they're trying to keep up. And the other thing is that so far there's no evidence of a recession. So as long as there's no evidence of a recession, I think the market will probably continue to melt up. People are chasing.
And what have you been doing?
Dang, that's my exact views.
So you can see, of course, everyone has been looking for evidence of recession and it hasn't happened. And then inflation has come down. Of course, lately inflation has inched up again, as you can see. Russia attacked the grain store at River Danube ports, and then also hits the Odessa port as well, which is also an important grain port. And then oil also has been inching upwards. So it looks like there are slight inflation risks coming back, and FOMC meeting is tomorrow. So there might be a 12.5% rate hike in 2 times, adds up to about 0.25% interest rates. So the Fed might still over-communicate and talk down the market and have a hawkish view. So I see that basically market is pretty much a little bit volatile, leading to more Q2 earnings. So I just going to show you a bit about what he thinks about the banks, which is around like 11 minutes.
Maybe people have their blinders on. I don't know what is going on, but that has somehow been like removed from the discussion in a way that it seems surprising. And given your background, I'm sort of curious.
I don't think it's removed from the discussion. The banks have had a very large melt-up in a very short period of time. I mean, earnings season has not been good for the banks. If you look, at the earnings, I'll give you an example. State Street came out and said that their deposit beta is over 100%. And what that means is that the Fed raises rates, let's say 25 basis points, they have to increase what they're paying their customers by more than 25 basis points. I've actually never heard of such a thing in the history of banking. So, I mean, my expectation is that...
you'd be short the banks at this point?
The problem with shorting the banks is that they're still cheap. A lot of people are short. What happened in earnings season was it wasn't a disaster. And so people covered I think people thought they would cover the stocks would. And the other thing is that things like, commercial real estate and other types of commercial stuff, it doesn't implode overnight. It has a long life before things start to get bad. So when it gets...
So as you can see, the possibility of rotation happening to banks, but this time may not be the big banks or the regional banks, but maybe fintech. You may be looking at PayPal, and I would put Robinhood also as under a fintech because in this case, because they are also receiving deposits from people, and they have like about 60 billion worth of cash deposits. If they put in the treasury at 4%, they would easily report quarterly earnings of 200 over million profit, unlike a traditional bank where they have to give out interest if you deposit money with them. But for Robinhood, if you deposit money with them, right, you don't have to pay a thing. They don't have to pay a thing back to the depositors. So these are the benefits of the other types of companies that receive deposits. So yeah, take note of that. And so that's all for today and market roundup. And I hope to see you again. Thank you very much.